Hello guys, welcome to Mr. FX. It's been a while, a very long time since I posted these videos, but going to come back, been busy lately. So right now, as you can see, I wanted to explain uh, how I did the analysis on this particular pair, which I have been holding it for like the last 7 days. Now we are heading to the next week and I'm still holding it, which is a swing trade. Some of the members in the community took this setup and some closed earlier because they were unable to hold it longer. But here is the analysis, all right? So let's go to a new broker, right? Let's look for a new broker and redo this analysis again, and you'll be able to see the things that I was looking at when I was doing my analysis, all right? So let me see this broker. Definitely let me see. Now, yep, this was the initial analysis. Let's delete everything here. So what are the steps that I do follow when I look at the market? When I'm looking at the market, mostly what I will do, this is the USD card. I'll remove the watermark on the background. The steps that I follow, number one, is to identify the trend. You have to be aware of the most recent trend of the market so that uh, you can be able to actually anticipate where the market is likely to go. Look on a higher time frame, be able to see what do you see on the higher time frame. Whatever you see on the higher time frame should direct you, or you should be able to tell where the market is likely to go. So technically, when I look at the market, I like look at the market on a higher time frame. I like look at the market on the higher time frame. I'll go to a big time frame, which is the monthly time frame. When you look at this pair on the monthly time frame, this is the most recent trend here. Now, if this is the most recent trend, we can see that on a monthly time frame, this is where we have uh, the most recent break of structure here. All right, this is the most recent break of structure. Now, on this break of structure here that we have on the monthly time frame, we get to see that the market was really pushing higher, and this is the high, all right, the low, sorry, and this is the high. So definitely this is what I'm talking about. This is a low here. So the market is very, very bullish, and automatically for the market to go lower, it will need a higher time frame supply for it to turn around. So the higher time frame supply is around here. Look at this area. This is where we have the monthly high time frame supply zone. All right, this is the high time frame supply that we have there. We call it supply zone. So this is the supply zone that we have on this market. So looking at it, uh, for it to give us a big move to the downside, I was actually anticipating that we get really to push into this supply before we get that massive drop, if in case it happens. But the most recent trend is bullish, all right? Primary trend is bullish, and the market, when it was pushing higher, it left actually a very, very nice demand zone here, which is on a monthly time frame, right? This is a monthly time frame demand that was left here. So when I was looking at the market over the weekend, I noticed that the market was on a high quality demand, which is visible more on a monthly time frame. So I identified this demand, and what I did is now to look into it, because of course you don't trade on a higher time frame, but the more you have a level that is originating from the higher time frame, the bigger the probability. So let's look at the weekly time frame and look into this area again. On the weekly time frame, you can clearly see uh, this market, how it took some time here. We'll remove this one for clear explanation. If we look at this market here, those who have done smart money, they'll see a very clean sweep of liquidity here. But that's not the big deal. Personally, I look at the environment around the area. I noticed this type of a candle here. This one is a hammer candle, which is a form of reversal pattern. So the moment I noticed this one, I did this, I highlighted this area. And when you highlight this area, you get to understand that this one is a key level that the market has left behind. All right. And whenever the market creates something like this, it goes away the traditional way, mostly uh, if you're into smart money concept, you are likely to keep chasing the market around in your lower time frames, maybe the 15 or 1 hour, or to keep chasing these most recent moves. But this area is an area of high probability. Once the market creates this type of formation and moves away from it, if it returns, because see, this one is a hammer candle, what it entails is that initially sellers pushed the market all the way to the bottom here, and the buyers came in and pushed the market near the closing, because you know that the bearish candles, they are open above and they close below. So near the closing here, and the next candle was a bullish candle, and the next one was an institutional candles, and pushes away, and they leave this key area as a high probability point of reversal. So when I was looking at this market, I noticed when the market came back here, because when I was looking at this market, I noticed this area where the market was really dropping to the downside. Let's see, stock of, allow me to cut here. I want to explain something. Right, look at this. The moment the market has left a zone that looked like this, and price started revisiting this zone, this means that most recent traders, they are trapped on the drop and they're looking for sales. So if they are looking for sales, then automatically some will not even realize that there's a level here of a high probability, and again they forget the primary direction of this market. Personally, when I noticed this market dropping back here, this is what I saw. All right, you can see market kept pushing higher, tapped on the zone, and the market taps on the zone. Of course, these are all retail candles here, pushing in the zone. Then look at this. All of a sudden, this candle shows up. This one is an institutional candle. Look at this. Price selling with the low momentum. Then all of a sudden, a big candle steps in after mitigating this high quality, high time frame hammer candle, which is on the weekly time frame. So once I noticed this one, I noticed the behavior of this candle. Yeah, this candle here covering the previous candle, both the low and the high. This is what we call an engulfing candle, which can only be created by institutional candles here, or in institutional moves. So the moment I noticed this candle has moved away, then automatically I knew, let me move this one, automatically in my mind, I knew that, okay, this one is a bullish, what we call a bullish move, yeah? A bullish move which can be caused by only institutions. So if I can go on a lower time frame inside this area and I find a key level, I have a higher probability of the market reversal to the upside. So if we go to a daily time frame now, right, when you look at this market on the daily time frame, allow me now to remove this line, and this is what I noticed on the daily time frame. That the market taps on the level and left to the upside, but eventually look at this. These are still retail candles here, and this one is an institutional candle coming in, and the market left this particular demand here. Right, the market left this demand here, or if you want to refine, you can refine it to the body up to that particular point. The moment you have something like this is a very, very nice, high quality daily demand zone. So looking into this one, I actually went a little bit lower, and I noticed a 4 hours demand. All right, I noticed a 4 hours demand, which are mostly people who mark the levels. They'll always pick a level like this, and this becomes a demand. This is where they'll concentrate, which is not bad. It's a good one. We look at it in decisive candles here, all right? But the problem is, look at this. The market has this hammer candle here again. This means that this entire zone is formed by retail candles, and the market has a right even of going lower to revisit these areas before pushing higher. So once I note this one, I was like, okay, measuring the number of pips here, right? Number of pips as the stop loss. The demand itself was like 27 pips. That was not really sitting well with me. I went lower to 3 hours time frame, and happen to refine that demand to here, all right, refine it to here. But you should not forget that this hammer candle still even showing up on the 3 hours. So I need a token in my mind so that I knew, like I was telling myself that, okay, if I enter this trend, instead of putting a stop loss lower, all right, because most of the time when you trade a setup like this, you enter a trade like this, and you want to put your stop loss here, like here. Sometimes the market might just revisit this bottom, all right, revisit this bottom and get taken out. So what I did not really mind about the size of the stop loss that went all the way. I remember my stop loss was 45 pips, 45 pips, 45 pips down there. You can see this 45. So my stop loss was there. I wanted to be below this main low here, and I placed my buy limit and walked away. So the market came here. Look at this. If we move forward, this way I entered this trade. My stop loss was down there. So I did not, you see, if you have a high quality setups and in your rules of doing your analysis, you see what you feel like this is enough confirmation for the price to turn around. Do your calculation, sorry, properly, proper risk management, place a trade and walk away. If there's something I'd like to give an advice to someone out there, all right, personally, this is a personal opinion, and it's from my experience. When I used to trade and I used to have 10 pips stop loss, 3 pips stop loss, market will go in, like tap on the zone, go in my direction, number of pips, then it will take me out and again and turn to the upside. So what I did, I decided to work with the risk management. If I have a high quality level, I'll trade the same level. I'll trade the same level, but maybe in risk management, if I feel like this 45 pips is a big zone, and if I refine it, maybe I'm lowering the probability of my trade, I'll take the same level with a little bit lower position. All right, I'll take it a little bit with the lower position. So I took this trade here, and maybe you can be asking now, where is the exit? Look at this. When you look at on the higher time frame, we notice that we are sitting on a monthly, weekly, and daily demand zone, which means that I'm going to target another high time frame opposing level. So if I'm entering this trade on the 3 hours or the 4 hours, then I'm targeting the daily supply or the weekly supply. So let's switch to daily and try to identify a high quality supply that's visible on the daily here. This is the current market here. If you look at around this area, actually we don't have any quality supply here. So expect the market to crash through these areas and push higher. So if you look at this area, let's talk this, you can see this indecisive accompanied by a decisive candle here. So this is the first supply that's showing up around here. All right, this is the first supply zone that's showing up on a monthly, on the daily time frame. This is the first supply zone that you see here, which is an opposing zone. And if you look at it, it has been mitigated before, and this shooting star was left there. Let's go a little bit high. Around this area, again, we can see rally. This is the base where the market had a lot of indecisive candles and the price drops all the way to the bottom. So around this area, we mark this candle. I know you refine, you'll mark like this, but you can mark it this wider version of a supply. All right, and let's try to compare on the weekly time frame and see the weekly time frame, which one is more visible. Very nice. So you can see when I go back to the weekly time frame, I get to see this weekly supply becoming even more visible, and the daily supply zone disappears. All right, the daily supply zone disappears, which means that if I go back to daily time frame, I can refine the daily, and that will be my first partial exit. So let's talk of the daily supply zone. Find it to here, because the wider version of it, the wider part of it is mitigated. So this one can be a zone whereby I'll expect the market to give me a clear, like a sharp reaction, something like this, and eventually we might push into this, because the weekly time frame is more powerful than daily, push into this, and before we get to decide whether the market will go up or lower. So I'm targeting personally, this means that personally, I'm targeting this area. All right, I'm targeting this area, and you can see my risk reward ratio is 1 to 5. I'm targeting there. And if the market here can close 80% of my positions, I can leave a small position to run, and I can be targeting this upper layer here. But as for now, my trade, I'm targeting this area. So that trade is running. And another confirmation that I had was I was looking at also the institutional chart, but I'll not go into the institutional chart. I'll just go to this. Uh, these are the website I usually use when I'm looking at fundamentals. Uh, fundamentals, all right. So let me see if it can be able to open. Don't know if it will. If it will open. This was like the other week. I was looking at the institutional because if you're trading the card, usdcad, you just need to look at the contracts of the Canadian dollar performance, and you can be able to decide what to do. But that was the fundamentals. Yeah. So this one I did first the fundamentals, of which is another video that's very long. I'll not go into details, but technically I'm just to respond to this analysis technically, because some of you are asking how did you get that trade. So let's look at the contracts on the Canadian dollar, and we're going to look at the contracts of let me check on my calendar here. Sorry guys, this one I will not be able to see, but let me go to my calendar. I want to check the date because, okay, this data that is out is of 7 this month. I need to check last month, all right? So if we check last month, last Tuesday of last month, so we'll come here in the history, and here this way we're going to change the date. It will give you the data clearly. Where is it? That was last month. It was date 24. And we look at the institutional contracts here. We look at the institutional contracts by the screen. Institutional contracts here. I was looking at this, and this is institutional contracts. This one 35. This data came out. That was on 24 of 6. So these guys were going along on the card, all right? They were going along on the card, and these contracts here, actually this one is not going to explain what I'm looking for. Let's come back here. First, yeah? First, not 7. First. Let's look at first. You get to see this again, commercials were long. Now, there's an issue with this one, and let me make it clear here. You see, if you follow these contracts here, most of the time they keep changing, and they are not consistent because they come out once in a week. Allow me now to just jump into my tools and give you the institutional chart. I do not want to go into it. So this one that I was looking, we're going to look at the card, the card, which is the card future, which is the Canadian dollar. So this is a Canadian dollar chart. And on this chart, we look at it here. So I was looking at the contracts, of the institutions here. So let me just go into this one, which is the fundamental aspect. I was looking at the behavior of retailers, what they were doing on the Canadian dollar. And if you look at this, these guys, this shows what the retailers most of the time they are doing, and most of the time the market will do the opposite of what they are doing. So if you look at this one, these guys are getting even more bullish. Say, look at this here. You look at this, these are the retailers' positions, and the more they get more bullish, the more the market will turn around. So you can see here, if you look at this data, they are getting more bullish. Again here, they are getting more bullish. And when they get more bullish, the market will do the opposite. So I'm just plotting this line here so that you get to understand what these guys are doing here, here. And finally, let me just reach somewhere here. So if these are retailers' positions here, contracts, the more they get more bullish, the more the market will do the opposite. And if you bring the candles, you're going to see every time retailers buy, the market will sell. Every time retailers buy, the market will sell. And you can see here and here. And eventually, I was looking at this, they were getting bullish. So here, I expect the CAD to sell, which means that on the USD, USD CAD, it's a buy because it's the inverse. So not just looking at the data, because I'm on the weekly time frame, and this tool that I'm looking at, it can be able to give me data of the last, at least minimum the last 26 weeks, all right? 26 weeks, which is 6 months. And thanks to whoever made these tools, all right? So if you look at these retailers here, so you can compare how extreme they are with the index here, how strong they are in the market or how extreme they are in the index. So here, I'll just remove commercials here. I'll disconnect the commercials position. Commercials, where are you? Here, right? And here we have down here, this is the retailers behavior, and the above that is the retailers behavior. As you can see, these are the retailers behavior, and here I can be able to see their strength in the market. So here I'm looking back 26 weeks. You can see when you go to the trading star, you get to see 1 week data. There's a problem, 1 week data. Well, here I have minimum of 26 weeks, and I was trying to look as high as 1 year, that is 52 weeks. And I wanted to see the behavior of these retailers. And I noticed that again, in 26, like 1 year, they're getting more bullish, which means that every time they get more bullish, I should expect a sell. So I think that's how far I can explain on this one. I don't want to run into a lot of details so much. So once I noticed that these guys were getting more bullish, of course, I noticed that on the card itself, this is the institutional chart. Also, it was sitting on a what? On a monthly supply, the same way usdcad was sitting on a monthly demand. Went lower, and again, I noticed that there's a zone that was here, right? Technically here, there was the price after reacting from this particular, you can see the shooting star there and the supply zone here. After the market went into this supply, first it dropped. So when it came back, I waited for this trade on a daily time frame, and I saw this particular daily demand. The price dropped here. It left this gap, which it came back to fill with this bullish candle. So when the price went here, actually, I was looking at it on the 4H to find the demand to the 4H. You can see this was my demand. It ran into this demand, and I took a sell here on institutional chart. So when it was dropping, then I knew that, okay, it's dropping, then automatically I'm buying the USD card. The same way I was targeting, as you can see, my exit point, daily demand. On the other side, we have our daily supply. So we have these two institutional gaps here that I look for to be filled, and probably these gaps at the bottom here. So looking at this on the weekly time frame, we can see that on the other side of the USD card, we have a weekly supply. The same way we have a a weekly demand zone on the card futures. So this is how the week closed, and you can see on the week it closed with a very strong. This one is a decisive candle after filling this gap. The market kind of rejected here, which on the USD card, we got the USD card. Where's the USD card? Okay, this one is the trade that I'm holding. If you look at it, okay, let me switch on this other broker side. Here, you can see how strong this candle is. So if I remove this one, get to see this is a very strong weekly candle, which on the daily time frame price is doing what? The market is moving sideways. You can see the market is moving sideways, which means that this is a demand that's being created here. So if the market's creating a demand, for someone who did not enter this trade, if the price returns on this demand, all right, if we get to see the market returning to this new demand, you can re-enter this trade. If come Monday, right, price returns here, you can re-enter here because here the market's moving sideways on daily, which means that the market's not going up or not going down. And here anything can happen. It can open and go higher, and open, go lower, mitigate this demand and push to the upside. So guys, that is an area you can monitor. Let me take you to the 4 hours, give you a fine area. This 4 hours is not really good. Let's go to 3 hours. So in 3 hours, I think can monitor this area. Though this one at lower looks more better. This one at the bottom, it's more better. This one, I like this one. So in usdcad, if it pull back itself here, then you can be able to take it. So if you go back on a higher time frame, this means that as it's moving sideways, if you get to see something like this on Monday, that, then you can re-enter and still target that area. So guys, that's what I wanted to explain. If you like my YouTube content and you want to see me post more of my analysis, you can just drop your comment. And also, if you want to join our community, you're welcome. You're welcome. If you want to join our winning team, we have in a week you only have 3 setups to 4, but high quality, high probability setups. So you're welcome, and see you guys around on the next. I think I'll post new what we call the new another video depending on how you guys will respond. Also have another pair that I took here. Yeah, but this is something for next time. See you around, guys.